Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you will learn about stock investing and personal finance that will help you become a great investor. In this video, I'm going to talk about Facebook, why I believe Facebook stock is undervalued right now, and why I believe Facebook's long-term growth prospects remain strong. I will cover these topics in this video. First, Facebook stock performance. Second, Facebook stock valuation compared with other major competitors. Third, Facebook's business model. Fourth, Facebook's long-term growth prospects. Fifth, Facebook's three main risks right now. Sixth, and what is my price target for Facebook and what I will be doing with all this information going forward. If you like this video, hit the like button, subscribe, and turn on the notification button. I will continue to make many great videos about stock investing analysis that will help you become a great investor. Let's start. In terms of Facebook stock performance, we have to compare Facebook with Alphabet, which is the parent company of Google. Because they are a duopoly and because they are the largest players in digital advertising in the US. If you look at their stock price increase in the past 5 years, you will see they follow a very similar upward trend because they're both competing in the same digital advertising market. As of January 15, 2021, during the past 5 years, Facebook stock increased 164.67%, while Alphabet increased 143.62%. During the past 2 years, Facebook stock increased 67.53%, while Alphabet increased 56.32%. In the past 1 year, Facebook stock increased 13.66%, while Alphabet increased 20.27%. And in the past 3 months, Facebook stock dropped 5.76%, while Alphabet increased 11.28%. Why is Facebook undervalued now? I believe Facebook is undervalued compared with other major competitors because of Facebook's two main risks right now. The two main risks are the new iOS 14 update that will limit Facebook's ad tracking on iOS devices without users' opt-in consent, and the FTC's suit against Facebook on monopolistic behaviors. I will talk about both risks later on in this video. Here's the comparison chart that shows why Facebook is likely undervalued right now. We have to compare Facebook with its biggest competitors, Alphabet, Snapchat, and Twitter. TikTok, the US version of Douyin in China, is also Facebook's biggest competitor, but it's not a public traded company yet. If you look at this table here, you will notice Facebook has the smallest PEG ratio, or what you call the price to earnings to growth ratio. The PEG ratio tells you how much price to earnings you are paying comparing with the company's expected earnings per share growth rate over the next 1 to 5 years. Generally speaking, the higher the PEG ratio is, the more expensive the stock is. And the lower the PEG ratio is, the more undervalued the stock is, as long as the stock is not a value trap. All of this data came from Yahoo Finance. Facebook's PEG ratio is at 1.58 compared with Alphabet's 1.99, Snapchat's minus 8.08, and Twitter's 3.45. This indicates that Facebook is undervalued compared with its competitors. Also, if you look at Facebook's forward price to earnings ratio, Facebook has a forward PE ratio of 23.94 compared with Alphabet's 28.16, Snapchat's 218.74, and Twitter's 50.20. The forward PE ratio also suggests that Facebook is undervalued compared with its competitors. If you are a long-term investor like me, it's very important to understand Facebook's business model, its long-term growth prospects, and its risks right now. Facebook is the largest social networking company in the world. According to Facebook's latest Q3 2020 earnings release, as of September 30th, 2020, Facebook had 2.74 billion monthly active users, an increase of 12% year over year, including Facebook's Instagram and WhatsApp. Facebook had 3.21 billion family monthly active people, an increase of 15% year over year. In comparison, according to We Are Social and Hootsuite, as of October 19, 2020, YouTube had 2 billion users, WeChat had 1.2 billion, TikTok and Douyin combined had 1.29 billion. Snapchat had 433 million, Twitter had 353 million. Facebook still earns 99% of its total revenue from ads. Around 1% of its total revenue is from other sources such as Oculus, VR headsets, Marketplace, and Shop. But revenues from other sources are not significant right now. I mentioned this earlier. Facebook and Google are a duopoly and the two largest competitors in the digital advertising market in the US. According to eMarketer's research as of October 2019, in the US digital ad spending market, Facebook and Google had a total market share of 60.9%, while Amazon had a market share of 7.6% in 2019. Then in 2020, Google and Facebook were estimated to have a market share of 60.7%, while Amazon had a market share of 8.6%. There are two very important metrics that would determine Facebook's long-term revenue and net profit growth. First, Facebook's daily active users and daily active people that measure how many users use all Facebook's services, including Instagram, Messenger, and WhatsApp every day. First, you can see that both daily active users and daily active people grew consistently every year. This is a very good sign. If you look at Facebook's total revenue and net income growth between 2015 and 2019, its total revenue grew consistently every year at a compound annual growth rate (CAGR) of 40.92% each year. Its net income grew at a compound annual growth rate of 49.63% each year. Right now, we should not expect Facebook to have the same high growth rate of 40% each year as before. For example, its most recent Q3 2020's revenue grew 22% year over year. Here's the very important part that determines Facebook's long-term growth. As long as the Federal Trade Commission, FTC, cannot force Facebook to break apart its Instagram and WhatsApp businesses into separate companies, I believe Facebook's daily active users across all its social platforms will continue to grow for many years, which will translate to increasing ad revenues for Facebook. According to Internet World Stats, there was approximately 7.8 billion population in 2020 and 4.9 billion internet users as of September 30th, 2020. According to Facebook's Q3 2020 earnings release, Facebook's daily active users, excluding Instagram and WhatsApp, were 1.82 billion. This means Facebook still has a lot of room to grow in its daily active user. Second, more and more businesses are shifting their advertising budget from offline to online or digital advertising. The pandemic has accelerated digital advertising and e-commerce for at least several years ahead. Even after the pandemic is over, I believe many businesses and advertisers will continue to shift more of their advertising budget to digital advertising. This trend will benefit Facebook and Google because they're the largest players in the digital ad market. According to eMarketer.com, eMarketer forecasted that digital ad spending worldwide will continue to grow between 2021 and 2024. Businesses are expected to spend a higher percentage of their total ad budgets on digital ad spending going forward. Third, here is another catalyst that I believe will drive Facebook's long-term growth. According to Q3 2020 earnings call, Mark Zuckerberg said, "This quarter, we also took major steps forward in building the next computing platform. We launched Quest 2, our most advanced virtual reality headset, right in time for the holidays. It delivers a real sense of presence, like you're right there with another person or in another place. And we have worked to make it accessible to more people. It's lighter, faster, has a sharper screen, and a new price point of just $300. Pre-orders have outpaced the original Quest pre-orders by more than 5 times and have surpassed our expectations. Then he went on saying, we're also laying the foundation for AR glasses, which will be the holy grail of delivering a sense of presence while not taking you away from the physical world. One day, you're going to be able to sit down for dinner with your parents, even if they're on the other side of the country, or look up directions without having to take out your phone and take yourself out of the moment. We're working on the building blocks for true consumer AR glasses. In the meantime, we're partnering with Luxottica, the maker of Ray-Ban and Oakley, to build our first smart glasses, which will launch sometime next year. Now, I cannot predict when exactly Facebook will release its AR glasses. All I know is that AR glasses will eventually become a revolutionary product that may replace our smartphones, or at least it will work alongside with our smartphones. Apple is developing its AR glasses that are rumored to release in 2022 or later. As of now, Facebook is the market leader in VR headsets, specifically its Oculus Quest 2. That is the most powerful and portable VR headset. There are no competitors out there that have a similar portable VR headset with an established ecosystem like Facebook's Oculus. I do believe AR glasses will eventually be a huge industry going forward. But again, 99% of Facebook's revenue is from ads right now. Now let's talk about Facebook's 3 main risks right now. The first main risk is that the Federal Trade Commission is suing Facebook, alleging the company for illegally maintaining its monopoly in social networking market and for practicing anti-competitive behaviors, such as acquiring Instagram and WhatsApp. According to the FTC public release, the FTC is seeking a permanent injunction in federal court that could, among other things, require divestitures of assets including Instagram and WhatsApp, prohibit Facebook from imposing anti-competitive conditions on software developers, and require Facebook to seek prior notice and approval for future mergers and acquisitions. I believe there's a small chance of FTC being able to force Facebook to divest Instagram and WhatsApp. US regulators have tried to force Facebook to divest Instagram and WhatsApp for many years, but it has failed so far. I think it's not realistic because many advertisers rely on Facebook to advertise across Facebook and Instagram, although divesting WhatsApp into a separate business may have the least impact on many advertisers. If US regulators force Facebook to break up its Instagram and WhatsApp businesses, Facebook will no longer be as competitive as now in the global social networking market. I believe the US will want Facebook to be the largest and most dominant social networking company in the world, instead of letting China's Tencent Holdings that owns WeChat and ByteDance that owns TikTok and Douyin to be the largest social networking firms. The second main risk is that Facebook's ad revenue is likely going to be impacted in the short term in 2021 by Apple's new iOS 14 update that will limit Facebook from tracking users on iOS apps without users' consent. Under the new iOS 14 update, users will need to opt in to allow ad tracking from Facebook. Ad tracking allows Facebook to collect data from users and place personalized ads on iOS apps. With this new iOS 14 update, many users will choose not to opt in to share data with Facebook when they're downloading and using iOS apps. This means it will impact Facebook's ad revenues in the short term in 2021 until Facebook finds a better solution for advertisers to advertise on iOS apps. The third main risk will always be Facebook's ongoing issues with user privacy and data collection. Regulators around the world, including the US and the European countries, have regulations that will fine Facebook in the future if they find Facebook improperly collecting user data and violating user privacy. For example, the FTC fined Facebook $5 billion because of the Cambridge Analytica scandal. Data collection and user privacy issues will always be one of Facebook's risks going forward. What is my price target for Facebook and what I will be doing going forward? Here's my price target for Facebook. Assuming Facebook will grow its revenues and net income at 20% per year for the next 2 years, which is close to Facebook's 22% revenue growth year over year in Q3 2020. I believe Facebook will eventually reach $362 per share or 1.03 trillion in market cap within 2 years. Before making this video, I bought more shares of Facebook because I believe Facebook is currently undervalued and because I like Facebook's long-term growth prospects. I've been a long-term investor in Facebook for more than 5 years already. In the long term, I believe FTC will not be able to force Facebook to break up its Instagram and WhatsApp businesses. It will have a huge impact on many businesses that advertise on both Facebook and Instagram, although the impact on WhatsApp may be much smaller. Also, I believe the US government will want Facebook to remain the largest social networking company in the world instead of letting ByteDance that owns TikTok and Douyin, as well as Tencent that owns WeChat and QQ to become the largest social networking companies in the world. If you like this video, hit the like button, subscribe and turn on the notification button. I will continue to make many excellent videos about stock investing and personal finance that will help you become a great investor. Thank you for watching and I will see you in my next video.